In the energy quadrant, crude oil finished lower on the day versus its open, slightly higher versus yesterday's close. That's because we gapped a little bit on the open today, but much more important than that, a weekly close above 60. WTI had its first weekly close above 60 since May 13th. It had consecutive daily closes above 60 for the first time since about a week later than that, about May 20th or so. But this weekly close is big. The last time that we had a weekly close above 60 was on the way up. Now, there was one on the way down. Obviously, there were several weekly closes above 60 when we were coming down from the highs of last year. But on the way up, last time we had a weekly close above 60, the next 5 weeks were consecutively higher in crude oil on our way to a 2019 high of over $66. So again, this is the first weekly close. This is not a technical signal saying we're going to get to that, but that's what happened last time we had it. These round numbers tend to be psychological, and 60 has been mentioned in quite a few pieces by analysts and crude oil experts, including myself. The Brent WTI spread is also starting to price in Iranian tensions again. Since it made a low at about 603 last week, it has moved up about 8.5% from there. Now, that widening is not necessarily supply and demand specifically, but it could be about the possibility of lower supplies of Brent. Now, that will eventually snap WTI up with it. But again, this close above 60 could be pointing to the same kind of thing. So that spread is widening. As that spread widens, you would expect a snapback to a tighter area, and it's not necessarily likely to be Brent falling. It could be. It could be. But given the technical breakout that we have in WTI, it's likely to be the other way around. This is not a trade recommendation. This is just what tends to happen when these particular setups arrive. And lastly, rig counts fell again. That is the 8th decline in the last 10 weeks for U.S. rig counts. And while we're not seeing a falling off of U.S. production yet, the continued fall of rig counts implies that that will happen. And when's it going to happen? Likely toward the end of the summer driving season. And if those two things coincide, it could mean weaker prices. But if it happens prior to that, that'll be demand going into lower supply again. The IEA also put out a report this week that OPEC is going to need to have to cut production even more to rally prices. But if prices continue to rally where they're at and OPEC were to make that step, again, that could be a strong view for prices. So still both sides of the market very unclear, but this close above 60 on a weekly basis is significant from a technical perspective.